Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it downdrafts because I kept trying to come up with one-word description that really described what's going on in the marketplace today and what I think is coming. And downdrafts, I think, does it. And we're going to talk about, show a couple of examples, but we're going to talk about the S&P 500. Look at one of my key indicators I look at every day, and then check in on a couple of the global indices that are experiencing downdraft, and then take a look at Disney and Micron Technology. All right, let's start off here with the weekly charts that are on the screen with the Dow, the S&P 500, the NASDAQ composite weekly charts. The Dow was down 444 points this week, S&P 500 down 56, and the NASDAQ down 381. So just when we think we had potential big turnaround type candles here, we really didn't get any follow through. And again, I've got my eye on that low, that February low in here. We get a close below that low and watch out. So we'll see what happens. Let's go back. I want to go back to the home screen and pull up the S&P 500. Okay, here's the daily chart of the S&P 500. The Elliott wave count is very similar to what I've got on the Dow Industrials. The little peaks back up in here in early February aren't exactly the same, but in terms of the wave count down 1, 2, and a 1, 2, that is the same as what's going on with the Dow Industrials. Now, I know if you look at this on a daily, you kind of sit back and say, well, it just kind of looks like a three-wave move initially, but when you drill down and take a look at an hourly and even the 130-minute, you see what was happening in here in terms of the wave count, the wave structure. And we did get a little sideways wave 4 and then a final downdraft fifth wave in here for a 5-wave move down as a part of that. And over here, the same kind of thing that happened in the first wave down right here. Okay, so that is the picture that we've got. That's the wave count. That's what we're looking at. The interesting thing is when you look at this hourly view, on Thursday at the close of business, I was pointing out to my members, I said, you know, we broke the trend line in the last hour of the day. It'll be interesting to see, do we get any kind of follow through? Well, sure enough, we got pretty strong follow through the very first hour of Friday morning, a little bit more on the second hour, and then we just kind of stalled out. Now, I must say, on all of the indices, the last hour of the day was a little disappointing to have this action on Friday when I was really looking for this trend line to break and for this low to be taken out. So we'll see what happened. This B wave of an ABC, this B wave did get taken out by the NASDAQ, but not by the Dow and the S&P 500. So be watching for that on Monday for sure to see if we get that continuation, or does wave 2 morph into something more complex? I mean, the thing you've got to realize that whenever you get into any kind of corrective mode, it can always morph into multiple type of looks. And typically the default, what you look for, the guideline view, I guess, is the best, is that a wave 2, you look for a sharp zigzag type correction. But there is no rule that says it can't be a flat, or the only thing it can't be is it can't be a triangle in a wave 2. Okay, so just FYI. So anyway, so that's the picture there with the Dow and the S&P. But I want to show you, I mean, not the Dow, but I mean with the S&P and the Elliott wave picture. What I want to show you is this. See the markers here? Let me go and make this a daily, just so you can see the daily chart by itself. Okay, so what am I marking here? This is January 4th. This is February 9th. And this is Wednesday, March 2nd. Now, the interesting thing about that, what did I notice when I was talking to my members in the middle of the week, on Wednesday, actually, specifically, I was looking at it and I said, okay, look at the short-term trading index. Since January 1st, here are the lowest readings, okay, right here. And when you get below a 0.5, okay, the reading here on Wednesday was 0.5243, so just 0.52. That was the lowest reading of the year. And these were the other two very low readings. Now, a low reading like this is a sign of bullish extreme. Readings way up here are a sign of bearish extreme and bearish price action. So right here, when was this? January 4th. When was this low reading? February 9th, March 2nd. And all you got to do, it's right here. These dates right here, which were the highs, the all-time high. Basically, it wasn't the exact price high, but it was the end of the wave 2, the way I've got it marked right here. I've got it as wave 2 right here. I have it as a complex wave 2, and not that one, this one. And then right here, it's the highest close of the counter trend move so far. I'm not anticipating this being taken out, but the next day we did get a little bit higher intraday, and then we've come down. So I am looking for continued follow through to the downside. We'll see if we get it. So I thought that was really, really interesting in terms of seeing that on the indicators and how it was meshing up with where that is at. All right, so let's take a look at a couple of the global indices. Now, this one is not going to be any surprise. Russia. The VanEck Vectors Russia ETF RSX down 83.1% from the October 2021 high. Basically just falling off a cliff. And actually, this is a weekly view. And with this last week, this actually closed. Let me just show you the bigger picture. We closed below the 2008 low. 2008, 2009 financial crisis low. This whole collapse that happened back here. No surprise. But I'll tell you what was a little bit of a surprise to me as I was going back through all the global indices for my weekly review with the members was this. Look at what's going on with the DAX in Germany. The Frankfurt Extra DAX, the main index in Germany, down 1,472.69 points this last week. The DAX dropped 10.1% this last week and is down 19.6% from the high the week of November 14th. Now, I know we came back up. We almost took out that high January 2nd when our indices were hitting all-time highs, but it didn't take out the high, 284.5, 290. It got really, really close, but it's down almost 20%, 19.6% at the close, and it closed right on its low. And the other interesting thing with the dotted line, this is well below the COVID-19 panic and sell-off that happened back here in February of 2020. So we've broken down below that high peak. Okay, so a lot of damage being done. And talk about downdrafts, that's downdrafts. You can see, of course, Russia for sure. But I mean, when you start seeing this kind of thing, that really is getting your attention. And then let's take a look at a couple of stocks that I track on a regular basis. It's on my favorites list. Let's start off with Disney. Okay, so Disney, this is a daily view. Disney has been in a pretty substantial downtrend since March of last year. So over the last year completely. Now, had a huge gap that it was created back here in November of 2020. And we almost completely closed that with the move down on January 24th. Got a pretty vicious snapback up in here. Did not take out the prior high. So we still have a whole series of lower highs and lower lows going on. We are in a downtrend. And then look what happened this last week, Thursday, Friday. Got this little trend line with the lows in here. And now all of a sudden we almost closed below it. But we did break through it on an intraday basis. And I was tracking the 195 and the 130 minute. 195 minute, it divides the day into 2 equal time frames. And the 130 minute divides it into 3. So just kind of a couple of different views that I like to use to take a look at. And in addition to looking at the hourly view, what I call the hourly view, the 65-minute view. So this picture here, it sure looks like it is getting ready to break down. We'll see if we get the follow through I'm looking for on Monday. And then when we take a look at Micron Technology, MU, Wow, this talk about having some swings. Let's just focus on the daily for a minute. Okay, so, here's the big move back up coming off of, the end of January. It actually punched to a lower low on back here on January 28th. And then we had a very strong counter trend rally. And then now it looks like we come back. But this week on Wednesday, look at this bull trap. I mean, look at this huge move that was made. It was actually, the entire range on this thing was 7.04 points. And we closed on Tuesday at 86.26. And we closed on Wednesday at 93.30. And then that was all she wrote. We closed on Friday at 81.57, down 2 days. Pretty big downdraft. And the key thing I'm looking at is the way this thing just shattered this trend line on Friday. Wow. Pretty negative picture to me. So again, we're watching this to see what kind of follow through we get. So a pretty good example of some pretty strong downdrafts that are occurring in the marketplace. We're watching, a lot of other ones, but those are the ones that kind of jumped out at me from this last week. And the DAX really, I don't look at the DAX on a weekly basis. And when I looked at it, on a daily basis. But when I looked at it at the end of the day on Friday for the week, I was like, wow. It really is like a crash for it to be dropping 10% in a week like this. Now that's the daily. Let's go back to that weekly right here. Here's what I'm talking about. I do think the high is in. I do think the end of the fifth wave's in right here. And, we'll see how the wave structure continues to unfold. All right, that's it for this week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a daily basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone have a great week. We'll see what happens. Talk to you on the next week video.